Welcome back, everybody. Apple is the most valuable company in the world, as well as one of the most talked about. And after starting the year being up 57% from January to July, they're down over 12% since August. And with Apple announcing Q4 earnings this week, the debates online, as always, have been a little less than balanced. It ranges from Apple doesn't innovate to it's overvalued to strong buy because of AI. Now, if you watch this channel, you know that I have a position in Apple that I actually started in July at the top. Now, I've continued to add to that position as the stock price has gone down, but either way, I have a vested interest in Apple's performance. And most of the commentary on Apple has been bearish, with people expecting them to post their fourth straight quarter of declining revenues. Now, let's take a listen to Steve Weiss on why he bought Apple puts going into earnings.
You concerned about what's going to be delivered next week?
I am. I mean, I don't know how much of an impact the 15 launch will be, because it really happened, a lot of it after the quarter. But I just can't imagine that the commentary is going to be good with what's happening in China, right? We're seeing Huawei really pick up share, and the government came out and said, to the government entities, don't buy Apple phones. And we're seeing them shift their supply chain to India. There's a reason they're doing that. So
Tim Cook himself was over in China, we're told.
Exactly.
Recently, right?
Yeah, just a couple of weeks ago, if not last week. So I think it's kind of troubling. Plus, it's overvalued. And they have not shown over the last few years the growth. We're seeing also the growth in their non-hardware business, and of course they're asset light, but in services also declined.
I was talking about a lot there, and a few of those points I think he's trying to make are a little bit disjointed, a little confusing, but for the most part, he hits on the major topics that everybody's concerned about right now. The iPhone 15 launch and questions about revenue growth, China, Apple's valuation, and then one that he didn't mention, which is AI. So let's dig into each one. Now, probably the biggest and most talked about concern for investors with Apple is their declining revenues. In Q1, revenues were down 5%. In Q2, revenues were down 3%. And then in Q3, revenues were down 1%. So obviously, for a company that saw a huge run up from 2020 and was trading at over 30 price to earnings, that's going to be a major concern that people are talking about.
There is an expectation that we're going to get earnings results later this week. And this is a company that's going to show 4 consecutive quarters of revenue decline. How much does that matter here? How much of that is priced into the stock?
Revenues are everything right now. Every meeting I have, it's how has Apple still got this valuation with revenue declining? What they have to do for the December quarter, which is their first fiscal quarter, is guide for revenue growth year over year, reported. Currency's a little worse than when they reported last. They had an extra week in the quarter a year ago, but they got to overcome that and put up some revenue growth in order for the stock to work, in our opinion. But I don't think it has to be much. Just give us some revenue growth, and we can reaccelerate throughout the next year. That should be enough for investors.
So basically, he thinks all Apple needs to do is show positive revenue guidance, and that should be good enough for the market. Now, I'm not sure if that's true or not, but there have been positive signs even in 2023. How Apple reports revenues includes the impact of exchange rates and currency fluctuations, which we've talked about in other videos. In Q1, revenues were down 5%, but they had an 8% negative currency impact. So basically, they were a plus 3% in revenues on a currency-neutral basis. And then in Q2, revenues were down 3%, but they had a 5% negative currency impact. So basically, a plus 2 in constant currency. And then lastly, in Q3, revenues were down 1%, but they had a 4% negative currency impact. So again, basically a plus 3% in constant currency. And of course, that isn't to say that the currency impact doesn't matter, because I think it does, or that a 2 to 3% growth rate is acceptable for Apple or justifies their valuation, because I don't think it does. But it's another example of how we really need to understand the context around the numbers that the companies are providing so that we get the full picture. Plus, outside of just the currency impacts, Apple had very positive trends happening each quarter if you read further down into the press releases. For each quarter in 2023, they set record revenues for services and overall install base. And those are huge for Apple's future and people's concerns over their sales, because those concerns have continued into Q4 earnings.
But more important than that, Apple reporting its Q4 earnings on Thursday. Company already implied sales for the quarter will be down, marking a full fiscal year of declining sales. And plenty of headwinds for the current holiday quarter. Analysts over the last few weeks reporting demand for the iPhone 15 lineup appears to be lower than it was a year ago. And while services are poised to show some reacceleration in growth, it may not be enough to make up for the lackluster iPhone sales.
And everybody keeps talking about declining iPhone sales, and while I think those are important, I think there's a major point that people are missing. But first, let's listen to Gene Munster talk about a similar problem with Mac sales.
It's 10% of overall sales. It has been up and down the last couple of years. It was up 23% in 2021. Before that, in the 5 years before that, it was basically up 2% on average, so it just rocketed. And this year, fiscal 23, it's going to be down almost 30%. And so does it matter to investors? If you have 10% of your business that's down 30%, investors want to see that right size. I think what they're going to do tonight is going to be a huge step in that direction. For the December quarter, I expect it to be up, call it 5 to 7%. So they care because this has been a dive downward in terms of revenue growth over the last few quarters.
A constant theme in 2023 for Apple has been their revenue decline and overall lack of growth. And we already saw that part of the story is related to exchange rate impacts as the US dollar has strengthened against other currencies. But something that we're not talking about enough is that Apple, in a lot of ways, has been a victim of their own success. From 2020 to 2021, Apple grew revenues by 33%, and they did this as the most valuable company in the world already. They grew earnings per share by 71% that year, which is just astonishing at that size. And from 2021 to 2022, it was a more modest 8% revenue growth. But we all know that in 2020 and 2021, we had a global pandemic, we had remote work, and we had government stimulus money. So people had more money in their pockets, and you know what they did with it? They bought iPhones and other Apple devices. And this is a classic case of pull-forward demand, where Apple realized some of that demand earlier than they normally would have because of the economic conditions. So you might be like, okay, great, but why does that matter? Well, it tells me two things. One, comparing Apple's current results to those years is a really tough comparison to match or beat. And the fact that they still grew revenues in 2022 by 8% and technically would still be growing revenues now on a currency-neutral basis actually shows me how strong their business is. And then two, and probably most importantly, it tells me that Apple has the products that people actually want. Because when they had money, that's what they bought. And those people who bought are coming up on their second, third, or fourth year of owning those devices, which means that they're likely to buy from Apple again. And this is why the Apple doesn't innovate anymore argument is weak and just totally misses the point. Because Apple doesn't need to sell you every single new iPhone. They just need to sell you that first one. So by the time that gets to 2, 3, or 4 years down the line, the devices are significantly better than the one that you have because of the incremental yearly improvements that they're making. And by that time, you're ingrained into the Apple services and platform to where you don't want to leave. And this is the game plan for Apple, not to have the most amazing phone innovation to sell everybody an iPhone 15. And that's what most people don't realize. Obviously, iPhone sales are still the biggest line item in Apple's revenues by far, but I would argue that new iPhone sales are a secondary measure compared to total market share, install base, and increases in services revenue. And if you look at all those numbers, they're all at all-time highs. So in terms of this earnings call, I would expect more of the same. Services revenues increasing, especially going forward now that they're raising prices on Apple TV Plus and the other bundles, as well as an all-time high install base and people switching to Apple. Because those have been the major messages all year, and I expect that to continue. Okay, but what about Apple and China? The Apple and China relationship has been talked about a lot, but recent events there have Apple investors a little bit worried.
What we are hearing is more and more reports of state agencies as well as state firms asking their employees not to bring their iPhones to work on national security grounds.
And the next day, one of Apple's biggest competitors in China, Huawei, began taking orders for its first flagship phone in years, something that some suspected wasn't a coincidence.
It's not an accident that all this stuff about potentially boycotting Apple products comes out at just the time when the Huawei phone comes out.
So not only was there a ban on iPhones in the Chinese government, but issues with Apple suppliers in China, as well as protests, are just adding to the uncertainty. In October, Tim Cook made his second trip there this year, and he's previously called their relationship between Apple and China symbiotic, which I think is a really good way to put it. Because China's been a huge plus for Apple over the years with a combination of manufacturing and engineering expertise and a large labor force, which has allowed Apple to scale up and keep costs manageable. And Apple in turn created jobs, progressed infrastructure, and pushed innovation in the manufacturing industry in China. But with enough success and time, like any relationship, it gets complicated. And I'm not going to act like I'm knowledgeable to where I know exactly what's going to happen there, because I don't. But I would assume that it's in Apple and China's best interest to keep the relationship going successfully, just from an economic incentive standpoint. But other than those issues, there's the general economic challenges in China that impact consumers of Apple's products as well.
It's tough, and especially the macroeconomic environment in China. Remember, it was a year ago we were expecting China to open up in December, January of this year. And, it was going to reinvigorate growth in that country. And we just haven't seen that materialize at Apple or many other companies as well. So that speaks to the state of the consumer there. There's more competition for Apple now with Huawei coming back on the scene. So that is one big tell. Also, just smartphone demand in these developed markets has been falling. And so there's just not the same customer base there was a year ago for these kind of devices. New Macs might help a little bit, but not enough to move the needle.
Now, in terms of smartphone demand being lower, obviously increased popularity in the new Huawei release is part of that. But I think there's an overall trend of lower smartphone demand that we should expect as well. Because about 86% of people in the world have a smartphone already. So most new sales are going to existing smartphone users and not first-timers. Smartphones are getting better, they're lasting longer, and in some cases, people's money is tighter. So they're making that cost versus value decision of saying, hey, my phone is fine, let me hold it for another year or two. And to me, this is why Apple's shift to services is so important. Because like we talked about earlier, it's not about selling every customer a new phone or device every year. It's about getting them into Apple's ecosystem and then keeping them there with incrementally better devices that eventually they move over to. And that's going to be true no matter if it's in China or anywhere else. Now, China as a business segment does represent about 20% of Apple's overall revenues, so it's obviously important. But I don't expect Apple to talk about anything specific related to China other than their sales figures and things that they normally discuss on their earnings calls. Now, Apple has been eerily quiet as it relates to AI in terms of their public comments. Tim Cook made a casual mention of it in their last earnings call.
And of course, we've been doing research across a wide range of AI technologies, including generative AI, for years. We're going to continue investing and innovating and responsibly advancing our products with these technologies with the goal of enriching people's lives.
And they've been in the news about planning to spend $1 billion a year on AI. And most people have taken this to mean that they were caught by surprise and are woefully behind their big tech counterparts. Now, personally, I don't think they were caught by surprise, but there's probably some truth to the fact that they could be behind if they haven't prioritized it internally. But just remember, Apple's not about being first when it comes to this type of thing. It's all about the customer experience and integrating it where it makes the most sense. But part of why I bought Apple is that I believe in their advantage on the consumer side of AI due to Apple Silicon. And here's what I said in my previous video. It would allow them to have the tightest and hopefully most seamless integration of AI features into the place where it can actually become a value add in our daily life. And Apple just announced their next generation M3 chips this week, pushing their overall performance up even more. And here's what Ben Reitzes had to say about it.
But it is a showcase for what they're capable of across their whole lineup. I've been really impressed with their silicon. I think it's going to have big ramifications in their AI strategy and how they process AI at the edge.
And when he talks about Apple's capabilities of processing AI on the edge, I totally agree with that. I think there are real possibilities there. So for this earnings call, I actually expect Apple to bring up AI a little bit more than they have in the past, but we'll just have to see. So clearly there's a lot going on with Apple as usual, and we didn't even cover all the things like the Apple Watch patent lawsuit or really anything related to Apple TV Plus other than the upcoming price increase. So of course, everyone's going to wonder where they're at from a revenue perspective this week, but regardless of whether they hit or miss on revenues in this quarter, I'm really confident in where Apple's core business is right now and in my position going forward. The primary question investors likely need to wrestle with is, what does normal revenue growth look like for Apple in the future? And how much is that worth? And hopefully we'll get at least a little glimpse of that this week. So what do you guys think? Is Apple going to post another quarter of declining revenues? Let me know down in the comments below. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins. And I'll see you guys in the next one. Peace.